Welcome to the Exceptional Advisor podcast series brought to you by the Investments and Wealth Institute. The goal of this series is to help you better serve your clients, differentiate yourself from the competition, and enhance your ability to communicate those differences. The Institute is a professional association, advanced education provider, and standards body for financial advisors, investment consultants, financial planners, and wealth managers who embrace excellence and ethics. Through our events, continuing education courses, and acclaim certifications, which include the Certified Investment Management Analyst, Certified Private Wealth Advisor, and Retirement Management Advisor certifications, we deliver Ivy League and practical education for investment and wealth professionals. Hi, I'm your host, Bob Powell. I serve as the editor of the Retirement Management Journal, which is published by the Investments and Wealth Institute, and I also serve as editor of Retirement Daily, which is published by The Street. Today, my guest is Larry Siegel, author of Fewer, Richer, and Greener. So welcome to the podcast, Larry.
Thanks.
Pleasure to have you. Before we get started and talk about your new book, for the benefit of our listeners who may not be familiar with you and your work, do you mind giving us an overview?
I don't mind at all. About 40 years ago, I began my career as an investment analyst and investment manager by working for Roger Ibbotson, the author of Stocks, Bonds, Bills, and Inflation, and many other famous works. He was a professor. I had recently been a student. I graduated. And he gave me a job where my office was the floor of his office. And he was an early bird, and I'm a night owl. So when he left around 2, I took over his desk. I did his work for him. And that was the beginning of Ibbotson Associates, which was sold to Morningstar in 2005. And meanwhile, I had been recruited by the Ford Foundation in 1994 to go work for Linda Strumpf, the chief investment officer there, as her director of research. And we interviewed managers. We decided how much to allocate in each asset class, how much to spend, and so forth. And I learned the buy side. After 15 years of that, I decided I'd accumulated enough knowledge and enough savings to go out on my own as a consultant, and that has succeeded. But what I really wanted to do was write books. So I, in late last year, finished writing the book Fewer, Richer, Greener, which is a departure from my investment background. It's more about the future of the human race. And I'm a modest guy. I choose little topics.
So, Larry, what does the title mean? Fewer, richer, greener.
We will have fewer people in terms of population in the world than we expected. Not actually a declining population until maybe the next century, but fewer than the population explosion literature forecast. So the world's population will peak at about 10 or 11 billion later in the century and then begin to decline. This is a huge improvement on the population explosion situation we were in the 60s and 70s, and will enable us to solve our environmental problems, many of our economic problems. Richer, starting in the industrial...
Actually, let me interrupt you for a second. When I think about fewer people, obviously, my read of the book is that it's a bit contrarian. Many people have been predicting that the population will grow, not decline, not have fewer people. How do you come to that conclusion that the population that there'll be fewer of us? What changes?
Well, yeah, I just read the United Nations Population Division reports. I have no special expertise on demographics. I've taken a course on it, but I see that the total fertility rate, which is the number of children that a woman has in her lifetime, has come down below 2, which is the replacement rate, in every first world country except for France and Israel. And even with massive immigration, it's below 2 in the United States, immigrants having somewhat more children. And what's more interesting is that in the developing world, it's below 2 in many countries, including China, Iran, Turkey, Brazil, and it's just above 2 in India, Mexico, Thailand, in Indonesia, you name it. So the only high population growth countries are in Africa and in the Islamic Middle East. And even those are coming down pretty fast. Mm. If you just project that forward using the same models and assumptions that the UN does, you get a peak population of between 10 and 11 billion people late in this century, somewhere around 2070. Yeah. And then it begins to decline as the whole world becomes more prosperous. It adopts first world to second world population growth rates, which are negative.
Right. And I guess that's how having fewer people helps us.
Well, it helps you in the sense that it's harder to feed, clothe, and otherwise enrich a large number of people than a smaller one. And if you just kept growing at the rate that we were growing in the 50s and 60s and 70s, you'd have 15 billion people by 2050, and it just keeps going up and up until there's more people biomass on the Earth than there is the mass of the Earth. And that takes about 4,000 years, which isn't very long, because 4,000 years ago, our ancestors were fairly sophisticated people. That was about the time that the Bible was written. So anything that can't grow forever is going to stop.
Right.
And I'd rather stop now. Because we can't stop in the past. I'd rather stop now than wait until we get to a situation that's clearly untenable.
Right. So one question with respect to that, many people have heard that we're looking here, at least in the United States, at the possibility of our worker to retiree ratio declining, and that the ability to sustain Social Security, for instance, becomes less and less because we have a declining birth rate and a lower worker to retiree ratio. I mean, do you see some downside into there being fewer people in that respect, that we lose our safety nets?
Yes. Yeah. Well, an older population means there will be more decrepit people who need help from 25-year-old nurses. So it means, first of all, that if we're able, we're going to have to work longer. You cannot work for 30 years to support a lifetime of 105 years, unless you live on roughly a third of your income during the working years. That the math doesn't add up. And it is a challenge, but it is not impossible, because first of all, there's no law saying that you have to start working for, what happens is you start working for real money sometimes in your early 30s. Mm-hmm. If you're more working class, it's earlier, but the middle to upper middle classes start working for real money in their early 30s and want to stop around 60. It ain't going to happen. Even if you don't have an aging population, there isn't enough money in the world to support people for a 90 to 100-year lifespan by working less than 30 years. So starting earlier, ending later, which means having to make work easier, especially in the tail end of one's career. You don't want a 72-year-old roofer on your roof. You may want a 72-year-old lawyer, because they have the wisdom to figure out your case in the context of all those years of experience, and aren't just learning their super specialty as they're working for you. Mm. So these problems get solved by markets. As paychecks for older workers will rise under these conditions, because they offer something that younger workers don't, and paychecks for younger workers will fall, and that means that you will have a situation of even greater inequality than we do right now, which presents other challenges. Mm. But the way to deal with that is in the richer part of my book, which is that overall economic growth helps everyone. It just may help different people at different rates. And what we have to do is figure out how to keep getting richer instead of doing what we're doing right now, which is to start a second Great Depression, which I'm really concerned about.
Mm. So, two things. Before I ask you more about the richer, I want to go back to the fewer part of your book, which has to do with immigration patterns and what you see happening with that. People have talked about, among other things, the rise of the middle class in Africa, and here in the United States, we've talked about the need to change immigration in order to support an older and larger number of retirees. Do you see immigration patterns changing in a world where there are fewer people?
Yes, I see. First of all, I love immigration, and I don't think that we can take in everybody who wants to come to the United States, because our population would be somewhere around 4 billion if you accept the results of some surveys, 500 million if you accept the results of the serious surveys that say if we would let you move to the United States right now, would you do it? Mm. But we can handle 500 million, but not 4 billion. The problem with that is that the cultural changes that come with massive immigration are wrenching for the people who are already here. That's why Japan does not encourage immigration. Still, if you go there, you're going to find that the lower paid workers are all Korean or Chinese. Mm. That they have a hidden immigration system, even though they say they don't. And countries with older workforces are going to have to accept immigration from countries with younger workforces, India being one, or else they're going to find that their lifestyles are very expensive. You know, a registered nurse in the United States makes about $130,000 a year. If I wanted to hire one to take care of me when I'm old and decrepit, even more than I am already, it would cost me all of what I make.
Right.
That's untenable. You have to do something else.
Right.
That's the sense I meant that markets will help solve this problem. Mm. Of course, our politicians will get in the way, and that's an issue for another day because I'm not a political scientist.
Right. All right. So let's go back to the richer portion of the book. It's obvious that we've gotten richer over the last 2 centuries, as you've said. Can you sort of summarize the evidence that you present for that?
Well, until the period after World War II, we haven't all gotten richer over the last 2.5 centuries. The Industrial Revolution started as a kind of a flowering of capitalism and democracy in the northwestern corner of Europe. It seemed to start in Edinburgh and spread outward from there until it reached the north of England, then London. There was a separate movement in the Netherlands toward letting business people do whatever they wanted. And what happened was a huge increase in the standard of living. People flocked from the farms of Ireland to the mills of Manchester, and it was kind of grim at the beginning because factory conditions weren't great. But they wouldn't have flocked from the farms to the factories unless it was for a big raise. And those countries became havens for inventors. If somebody invented something in Czechoslovakia, it got manufactured in Manchester. Mm-hmm. And you had this period, very much like the period of the last 40 years, from about 1750 to 1820, where there was just an explosion of ideas and scientific discoveries that led to a self-sustaining increase in the standard of living in areas that adopted what I would call liberal democracy. Mm-hmm. The word liberal had a different meaning then, which I prefer to stick with, which is meaning that it is putting a high value on liberty, and particularly economic liberty, the ability that if you produce a resource, it's yours to do with what you want to. Mm-hmm. So that eventually became the dominant system in the United States, as well as much of Europe, and spread to Japan. But by 1948, China and India were almost as poor as they were in the Middle Ages. And Africa was probably about as poor as it was in the Middle Ages. The great divergence was that the first world pulled away from the rest of the world for 200 years. Mm. And this is this was terrible because everybody counts. And then beginning about 1948, we got the Great Convergence, where the rest of the world began to catch up. First, the quote unquote rest of the world was places like Korea, Taiwan, Singapore, parts of Latin America, parts of Southeast Asia, but China and India remained behind. China farther behind because they had a Maoist approach to the economy, which does not have an economy. India was Nehruvian, which was a blend of socialism and small scale capitalism, and they did better. But when China began to reject Maoism in 1976 to 78, when Deng Xiaoping became the Chinese leader, that surpassed India almost immediately and has done very well. India began to catch up in the 90s when they too adopted a capitalist program. So now the world is, on a country by country basis, becoming more equal every day, and because we're growing slowly and they're growing fast, and yet within countries there's more inequality, which is exactly what you would predict from this globalization. An American accountant has to compete with an Indonesian accountant who will do the same work for you over the internet. You're going to get more inequality in both countries. The Indian accountant will become rich, the American accountant will become poor. And yet both countries are better off for that trade. It's a very tough sell to Americans. It's an easier sell to Indonesians.
Right. So,
but they're people too.
Right.
And I could have been born there. Or I could have been born where my ancestors were born 2 or 3 generations back in Central Europe, and had faced a different set of problems, which is how to get the hell out of Dodge before the bad guys came.
There's
we're just lucky to be where we are.
There's an interesting mention in your book where you talk about whether people often have a fondness for the past, thinking that it was better back then. But I think you wrote that that's not necessarily the case, right? When I think there's a reference that you made to anesthesia, I think it was perhaps in the book, and how that changed the world, and we're all the better off for today because of that. But you wouldn't want to have lived in the days before anesthesia.
No, I would probably have just died. And anesthesia came in the 1840s, and before that, all surgery had to be performed while you were conscious and really drunk. It had to be held down by a group of strong men carrying dangerous objects. I probably would have rather died than submit myself to that. So the people who say that things were better in the old days are usually looking at what their parents or grandparents experienced and focusing only on the positive aspects of it. If you really look back hundreds of years, very few people want to trade their lives today for the lives of a person who would need surgery without anesthesia or had no heat, no air conditioning, no telephone. People aren't that crazy, but there seems to be an innate human tendency. It may be part of our neurological wiring to glorify the old days. If you read the first few paragraphs of the Old Testament, it talks about the days when there were giants in the earth. And that was in the past, and that was written 1,500 years before the birth of Jesus of Nazareth. So this tendency has been going on for a while. If you read the Greek myths, it's the same thing, the Roman myths, the Norse sagas, and and every other culture. It was always better in the old days when there were real heroes, and that is what we're up against, because people are afraid of the future. They don't know what it holds. It could be bad, but they know what happened in the past, and they can screen out the bad and only remember the good.
Yeah. Let me go back to inequality for a second. Here in the United States, there's been a great deal made about the inequality in terms of what CEOs make relative to hourly workers, one. And then two, also with respect to the standard of living, maybe not over the course of 200 years of American history, but maybe over the last 50, 60 years, where the standard of living for people in, say, the 1950s could have been sufficient on one income, but now it seems that it takes two incomes to have a similar standard of living. So two different thoughts, but maybe you can address them both separately or together.
Well, let me address the standard of living in the 50s. At the beginning of the 50s, the GDP per capita stated in today's dollars in the United States was around $16,000. And at the end, it was probably up to $24,000 or $25,000. So it went from a quarter of today's to a third of today's, or a little better than a third. It was a period of very rapid growth. People perceive changes rather than levels emotionally. I grew up with my parents earning one lower middle income. It was enough. We had a 1,000 square foot concrete slab house with asphalt shingles, no garage, no air conditioning, no attic, no basement. But it was better than what other people had down the hill in the ghetto. And it was not as good as what other people had up the hill where the rich people live. Mm-hmm. And so we never thought about inequality very much. We thought about how lucky we were that we were not in the second Great Depression that was widely expected after World War II. We were in a period of rising incomes. Eventually, my parents could afford a stereo. After that, they put me through college with help from the college and from my grandfather and from me, flipping pizzas and looking up stuff in the library for my professors. That's what the working class to middle class life was like then. Mm-hmm. Now that class has disappeared. It is split in two. The larger half of that split has become the mass upper middle class of college educated professionals, and I am one, graduate school educated professionals. That in the 1950, it wasn't the census, but around 1950, about 3% of the United States was considered upper middle class. Now it's 15 to 20. Mm-hmm. The other half has become somewhat poor. They're typically working not for union wages, but for a little more than the minimum wage. And so that's where you get the perception of inequality. I'm not so concerned about inequality. I don't care what a CEO makes. I figure that price is set by the market, and that if I had to run a large company, I would completely fail. And I'm a pretty smart fellow. So it must be a very special combination of talent, drive, and energy that most people, even in the professional upper middle class, don't have. I'm more concerned about poverty. If we eliminated poverty, nobody would care about inequality. At least that's my thesis. Mm-hmm. Nobody begrudges LeBron James his high salary. Mm-hmm. Very few people begrudge Bill Gates his high salary because he invented the product that made him rich. Mm-hmm. What people don't like is very high salaries earned by people whose value added they just can't figure out. Mm-hmm. And they see themselves as being potentially one of those people who will never get one of those jobs. So if you are a person of ordinary middle to upper middle class ability, and you see a hedge fund manager who resembles you in many ways, making billions, you're going to say this person is moving money around using a computer screen and achieving nothing, probably ripping somebody off and making them poor and themselves rich. They're not really doing that, but I understand the perception because I'm in that position myself. Many of my friends have a net worth of 10 or 100 times what I do, and I also have some friends who are billionaires. One anyway.
Mm.
And it's a little hard to take, but I'd like to think I'm well adjusted enough to realize I've been paid in proportion to my contribution. So have they, and we've done different things with our intelligence.
Right. Anything else about the section having to deal with richer that we haven't broached that we ought to?
Well, it's 250 pages long, and it's full of history, photography, art, poetry, cartoons, jokes. The book is intended to be a fun read. It's airplane reading if you have the same twisted mind that I do. Mm-hmm. So if you're a little more specific, I can help you out.
Okay. All right. Well, let's move on to the greener section. Why do you think an increasingly affluent world will become greener?
Well, look at Switzerland. The whole country looks like a national park. The worst part of Zurich kind of looks like the best part of Detroit. They've preserved nature in a remarkably spectacular way. And it's just an example of the fact that the rich countries can afford to sacrifice some current consumption to preserve nature, to improve the quality of the environment for the people that live there and for people in the rest of the world, whereas the poor have to think about tomorrow's meal or tonight's meal. In between, you have in-between results. Go to a middle-income country like Brazil. A lot of Brazil is absolutely beautiful, but they're still cutting down trees in the Amazon to make more land for farming because farmers would like to make more money. They'd like to earn a living. And Sao Paulo is nobody's idea of a beautiful city. Rio is. But yeah, as environmental goods are public goods, an individual doing what's best for himself can't change the environment very much. I can put my recycling in the recycle bin, but that just doesn't do much. You have to have a government in order to manage large-scale environmental problems, and people will only choose a government that places a high value on the environment when their immediate needs are more or less met. And if you notice in the United States, the environmental movement really began around 1876 with the establishment of Yellowstone as the first national park. And then Teddy Roosevelt made it into a mass movement involving a lot of dollars, a lot of other people's money, which they were happy about. They didn't complain about it. As far as I know, somebody must have. And this was right as the United States was becoming a first world country in terms of its income. And the Clean Air Act of 1970 cleaned up the air pretty fast. It probably should have been the Clean Air Act of 1947, but our political system moved slowly, and we got around to it in 1970 when we had a Republican president, Richard Nixon, who had strong environmental views combined with the Democratic Congress. Sometimes you get things done better when we all work together. Hint to the authorities of the present. Other countries are moving faster than we did in relative to their economic progress. China has started to have environmental policies that are cleaning up their air and water pretty fast just in the last few years, as they're not quite a first world country, but they're getting in the middle range of world incomes. And gradually this is going to spread as the world becomes richer.
In your book, you talk about the dollars being spent on climate change and how those dollars might be better spent on other things, given the relative impact of the $1 trillion spent on improving the climate.
Well, I didn't say that they could be better spent. I said that you have to, it's an asset allocation problem based on risk management. There are many threats to human life and well-being and enjoyment, and climate change is one of them, and it's very expensive. So what could you, $1 trillion isn't going to do anything. It's trillions and trillions, and who knows how much for how long. So adaptation to changing climate is also expensive, but it's more likely to work. You could build a seawall around the Ganges Delta in Bangladesh for several $1 trillion that would eliminate the need to keep the sea levels from rising for probably hundreds of years. They did the same thing in London. The Thames Barrier works fine. London's not underwater. They could do the same thing in Vietnam, where the Mekong Delta actually is so large that it extends all the way inland into Cambodia, all the way across the country of I still call it South Vietnam into Cambodia. The Nile Delta in Egypt. We could educate 1 billion girls in developing countries. Not quite for $1 trillion, but you can do it for $1 trillion a year. That's $1,000 a year per girl. We could eliminate malaria for about $100 billion. Bill Gates seems to be wanting to do it all by himself, has made a lot of progress. You can measure the degree of progress and see that he will succeed if he keeps at it. So human misery is a very complex problem, and you'll be very miserable if you're underwater or you live in a country where the high temperature is 125 degrees every day. But adaptation strategies and solving other health and human problems at the same time as we try to mitigate climate change in a rational and efficient way is a better solution to the asset allocation problem than putting it all into climate change.
Right.
I am not saying that the climate isn't changing or that we should not put resources into climate change.
Right. So obviously climate change is a slow-moving problem, and in some cases people are either denying it or saying that we have time to deal with it. What camp do you fall? I mean, obviously you're not denying it, but what's your thought about it being such a slow motion problem and the will to tackle it, or is there or not there?
Well, I'm concerned that it's such a slow motion problem that when something else distracts us, we're just going to forget about it. And right now we're battling the coronavirus, but that'll go away. And I don't know if it's 2 months or 18 months, but then climate change will come into focus again. And it's very difficult to know how severe the problem is. And it's because it is the motion is so slow. Let's think of just in terms of sea level rise. The base rate is a foot every century and a half. Now, when I live in two places, here in Wilmette, Illinois in the summer and Del Mar, California in the winter, where I happen to live in the beach flats, which, although Del Mar is a mountainous area, I'm about 7 feet above the mean high tide, or not the mean high tide, but the highest high tide. Mm-hmm. Well, so I've got 600 years to go. I don't own that property, but the person who does and who rents it to me is fairly young, and she will still be here in 30 or 40 years, and she won't have noticed that anything has changed.
Yeah.
Not even the price, because using a discounted cash flow model, the fact that you're going to have to tear it down well before 600 years, not because it'll be underwater, but because it just won't be any good anymore. It is so far out in the future that it doesn't affect the price. So it's very hard for financial markets to deal with problems that are out so far in the future that they don't affect the price signaling process.
Mm.
But insurance companies are supposed to be doing this. And if you build a building where they can't insure it because if, say, that the sea level rise accelerates dramatically, you're out a couple of $1 million, and so they're not going to insure you. You might build it somewhere else.
Right.
That is how markets operate. I believe we're making a lot of progress toward non-carbon transportation. Airplanes, not really, but cars, yes. But where are we going to get all that electricity? It's going to have to be nuclear power.
Right.
The French can do it, so why can't we?
Yeah.
They've figured out a formula, which is small plants with interchangeable parts and interchangeable workers. So that when something goes wrong, you just fly all the workers to the plant where something goes wrong. They know exactly what to do because they did it last week. Mm-hmm. Now, do we have this system already? Yeah, we have it for 737s, the airplane. Every 737 is not the max, but every 737-800 is exactly the same. And Southwest Airlines only buys that one plane, so every pilot can fly every plane, and every mechanic can work on every plane, and they're the only airline that makes money. Mm. We can do it with nuclear power if we just convince people that it's okay.
Right. Well,
there's just no other power source that comes anywhere near being able to generate enough power.
Right, and I suppose that includes solar, if ever there was a way to.
Well, solar panels are they've become cheap, but they're not cheap to put into place. You have to drive them there, install them, maintain them, and then they don't last very long. You have to dispose of them. Mm. Wind farms are an ecological nightmare. You have to dig up 300 tons of material for concrete for each windmill as the foundation, move it there, install it, maintain it, and that's just the foundation. The windmill, God knows how many tons of steel and aluminum, and you know where those come from, somewhere under the ground, and you're using gigantic amounts of non-solar energy to get it out. Right. So the payback period is around 500 years fully allocated. Mm-hmm. Not in dollars and cents, because you're getting a subsidy from nature.
Right. So let's turn our attention to investors, and what advice do you have for them? What does all this mean for them? Is it a bullish forecast? What's the time horizon? What about the current crisis that we're in?
It's a bullish forecast. You just have to be a really long-term investor. I mean, it's a lifetime time horizon. If you're investing in your 20s, 30s, 40s, and you plan to spend in your 60s, 70s, 80s, that's a long enough time horizon for the bullish forecast to, I think, be pretty well assured of being right. Mm-hmm. If you're in your 50s, 60s, and 70s, there may be a part of your portfolio that you're buying now that you plan to spend in 20 to 40 years. And for that part of your portfolio, it's pretty well assured of being right. In the short term, we're in a depression. We haven't been we've been in long, shallow depressions before, but they were endogenous. They didn't come from a virus or from our policy response to the virus. That they came from various failures of the financial system, as in 2008, or the monetary system, as in the 1973 to 82 period. Mm-hmm. This is much worse, but it could be much shorter. It's up to our policymakers to figure out how to reopen the economy, because the damage isn't linear. 2 weeks is kind of like a long vacation. Mm-hmm. It's National Lampoon's European Vacation. You may empty out your savings account, but when you get back, you work even harder and save even more, and you're better off after it than you were before. 2 months is nearing a catastrophe, but it isn't quite. But there are tens of millions of people in India who have 80 cents to their name, and that's enough to buy food for that day because they worked that day.
Right.
You take them off the market, and there will be a famine in India for the first time in very many years. That we've always heard India is starving. Well, it's not. They don't want to start again. They're old enough to remember when there were famines. And pieces of our infrastructure are starting to collapse. And the pieces you don't think of, the mortgage market. If you don't have to pay your mortgage, the mortgage system could decay the way it did in 2007, 2008, to where you can't get a mortgage for a few years. That puts a lot of construction workers out of work who are perfectly healthy, and there's demand for those houses, but people have to borrow 90%. So the only people who get a mortgage are the people who don't need one. That's what you get with a 2-month shutdown. With a 2-year shutdown, you're kind of looking at going back to the dark ages.
Right.
Yeah. But we all have to grow our own food. So
right.
I really hope our policymakers are aware of the trade-offs between the problem right in front of us and the problems we're creating by solving the problem right in front of us.
Do you anticipate 2 years as a horizon for us coming out of this?
No. But when I hear some of the people that claim to be experts on the topic, they anticipate waves of mutated coronaviruses attacking us, but at a lesser severity, because a lot of people will be immune and a lot of people will be recovered, but it'll still be a problem over the next 18 months to 2 years. There are 70 vaccines now in development, 3 of which have progressed to human trials. Our FDA is highly motivated not to hold up the human trials to the point where we can't have the vaccines. People have to understand that living with risk is something that the human race has always done. One of the economists that I like to talk to, Victor Canto, said, I'm from the Dominican Republic. We live with the possibility of dengue fever every day. I don't want to live with the possibility of dengue fever every day, nor do I want my kids to live through a 20-year Great Depression instead of a 10-year Great Depression. These are trade-offs, and they have to be addressed by serious people who understand trade-offs. I'm sympathetic to the doctor who has a sick patient in front of him. That doctor wants to cure the patient and isn't worried about children starving in India or the mortgage market, which is why the doctor shouldn't be the only person helping to make decisions.
Right. I mean, I think the consequence of this is that we may only know whether the actions we took were right years from now, perhaps. Right. We'll only know if we got it right or wrong later. We won't know in the moment.
Yeah, we still don't know exactly because we don't have a controlled experiment where you do what they're doing in Sweden, and they have a controlled experiment, but we're not Swedish, and they're very compliant. They do whatever the government tells them. So with moderate social distancing, they're achieving about what we're achieving with extreme social distancing. They haven't solved the problem. They've got coronavirus, but they don't really have more than anybody else. And they have a very strong economy. So we're conducting these small-scale experiments, and in a decade, we're going to be handing out massive numbers of PhDs to economists who have studied that decade. Maybe a Nobel Prize.
I can only imagine statisticians and epidemiologists and so forth. Right, will become a new sought-after profession.
That'll become the glamour profession, and nerds will rule even more than they do now. They'll be able to get dates.
Any last words for our listeners?
The human race has been confronting and generally winning battles with viruses, battles with each other, battles with poverty, with a pretty good success record for a very long time, at least most of the last quarter of a millennium. I don't think anything's changed, and I would be optimistic about the future, even though this is a hard time to say that.
All right. Larry, thanks ever so much for being on the podcast. It's always a pleasure chatting with you.
Thank you, Bob.
Thank you for listening to our Exceptional Advisor podcast. My guest was Larry Siegel, author of Fewer, Richer, Greener. If you've enjoyed this podcast, please subscribe through iTunes, Spotify, or our website at www.investmentsandwealth.org/podcast to get the latest episodes of our Exceptional Advisor podcast series. The Investments and Wealth Institute has been helping investment and wealth professionals become exceptional advisors for over 30 years. Please visit our website at investmentsandwealth.org to learn more about our certifications, conferences, online learning, and continuing education programs.